Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Sunil Jain, Head Equity Research at Nirmal Bang, joining in. Welcome to the show, Sunil. My first question coming to you over here is, last when we spoke, we were pretty much in doldrums in terms of markets. There was no major direction that we were able to pick up. But now, if you go to see, we've seen a 50% recovery in markets in terms of, say, from March lows. What is the sense that you pick up? What is actually leading this kind of rally? Because we are almost, say at a 5.5 to 6 month high now.
Yeah, thank you, Hiral, for having me on the show. Uh, See, what we had seen post very sharp decline in March was by governments and central banks across the world. Be it US, Europe, everywhere, they had come up with massive infusion of liquidity in very short period of time. In fact, if you see 2008 also, they were quite successful with the infusion of liquidity and revival of the market, and then followed by revival of the equity, revival of the economy. So, since they had a precedent, this time again they had come up with the same solutions, and people were quite positive because of that, and the market has recovered. Now the point is whether the economy is also recovering or not. No doubt, economy generally take time to recover. It doesn't happen overnight like equity market. So, coming from the US point of view, if you see, no doubt the decline was so sharp, there is a bounce back. But still, if we see the decline in uh, their production index is 8% in July month. Whereas if you see the unemployment rate is still at 10%.
Correct.
And uh, even if you see other indices like in India also, no doubt there is a recovery.
Mm.
We had seen June quarter as the worst quarter, but there will be recovery in second quarter as compared to first quarter. There will be recovery in third quarter as compared to second quarter. So things will improve, but market is factoring in what? Market is factoring in right now that FY22 will be a very normal year, wherein there is no impact of any COVID. We will be back to normal life and normal activities. But what I see that there is a lot of disturbance which has happened because of all these, and a lot of uncertainty has also built in all these scenario.
Mm.
So FY20 building in FY22 as a very normal and steady state year may not be the correct one. So no doubt excesses always get created in the equity market. We had seen excess on the downside. Now again, what we see that somewhere excess is getting created on the upper side. What we are seeing that if you see the indices point of view, it's just around 5-6% down from the pre-COVID level. And in
Mm.
international market, all indices are at near about their peak level before COVID level. Even one more surprising thing is if you see the small cap index, that is already at just near to their pre-COVID level of say 19th February or whatever you can say. So no doubt things are recovering, but the, the way market is performing is I feel is more due to liquidity than the core performance. Core performance I feel can take some more time to come back.
Right. Sunil, you made a very valid point, and everyone is of that opinion that the kind of up move that we've seen since March close is mainly liquidity driven. However, the expectation is that global central bankers are going to at least keep the liquidity tap on. Now, do you think that is something that will continue to support the markets from here on, as well as the valuations of Indian markets as well? Because clearly, Indian market valuations are looking really stretched as compared to other global markets.
Yeah, definitely the valuations has reached to pre-COVID level, whereas the recovery in, if you see the sectors wise, is still far off. Uh, See, the market is holding up because there is a liquidity already infused, and there is a confidence that whenever the crisis comes, then again liquidity will be made available to the market, and that is the key reason that market is consistently moving up.
Mm,
So, to predict that the liquidity will keep on pushing up the market, sometime become a bit difficult to assume in a near term. But yeah, definitely in a bit a longer time, ultimately things will have to come to fundamental, and people will start looking at whether the same thing is getting translated into the earnings and all. So, yeah, near term, the expectation of further liquidity infusions by central banks and governments will keep market maybe supportive because of that.
right. So, can we say that in the current scenario, we will see some consolidation phase in the domestic markets, and our markets will be waiting, say, for fresh triggers at least for a couple of weeks from now? And will this optimism sustain according to you?
Yeah, see, the very valid point you had come out with the trigger. That is,
Mm,
I think, the key thing which one need to watch in the near term. What we are seeing that there are two, three triggers which are there in the near terms. One is that we had seen that the banking sector has not performed along with the whole market. They are kept down. Whereas on the other hand, all the large bank has raised equity to fight with whatever the problem they may face because of the past or any shortfall in their asset quality and all. So, quite possible in near term, as the companies are coming, all these banks are coming out of moratorium on this 31st of August, then people will be more clear in another 15, 20 days or maybe 1 month that how far the stress is there in their books. So, stock related to the banking, since they had not performed and market is in upturn, they can still perform in the near term because they
mm,
are the laggard and left out. And
right.
generally, what we had seen that the laggard is also start performing at the towards the fag end of the rally. Another important event which one need to keep a watch is on the COVID
Mm,
vaccines, which we feel can be there could be positive news in the month of October.
mm,
So that is quite possible. Quite a few vaccines are there, which is in phase three, and trial is going on a large scale of people. So there will be some outcome because of that in the month of October. So US FDA has said that even if the vaccine is successful over 50%, they will accept it. So quite fair chances is there that one of the vaccines is successful, and
mm,
they may allow it to get implemented, and market will factor in that. The third most important event thereafter will be of a election in the
mm,
US. I think that is also very crucial event. So one need to be watchful of that, because what the news we are getting, or whatever the news are there in the press, is that the another person, that is Joe Biden, is ahead in Trump's policy. And if you see his mandate, he has talked about a lot of corporate tax increase.
Correct.
So we have two positive event first, and then negative event. So what I see that because of this positiveness, and if suppose the banking stock start performing, then stock may see that they have a very big weightage in the Nifty, and that can take Nifty up 500 points. That is not completely, we can't say no, not possible. So that is very easily possible. If suppose they start performing, then that can take the Nifty up. And all these events can continue for one and a half months. So in that period, positivity may continue because of these events.
Right. And a very valid point that you've made with the three triggers, Sunil, that we need to watch out for. Now, do you think domestic markets have that resilience where if there is a negative reaction, we might not see a steep correction? Or do you think there is a full chance, taking the valuations which are stretched into consideration, where in case there is any negative news, say something doesn't happen on the vaccine side, God forbid, or something negative that comes out with regards to US elections go, or with regards to where the asset quality of the banks is concerned on the back of the moratorium that has been provided, any negative news on any of the three events, do you think there is a possibility of a major correction that could come in? Or it could only be a minor correction that we could see in the domestic markets? What do you read out of it?
Hiral, what I see that it's not independent. India will move in any direction. What we had seen in the last 4, 5 months is that all world is moving in same direction. Whatever the excess liquidity is there is getting infused into various asset class, not only equity, be it metal, be it whatever the asset class you say. Even if you will be surprised to know that people in the US are investing more in house. If you see their housing sales is higher than the pre-COVID level, whereas the industrial production is down by 8%. So money is moving, lot of money is there in the market, and that is made available for the revival, and that is going in all the asset class. So if suppose even any bad event happens, or at a global level, I'm not talking about at an India level, then again all these central banks and government will come up to support the economy till we get good solutions where federal bank start believing that yeah, now we can keep the rolling on its own rather than infusing any bigger money. So what I feel like, no doubt, we had seen 5 consistent months of increase. There could be corrections. Nifty can be can correct by 3-4% or 5% also. That is not a big thing. But again, there will be central banks, and there will be hope, first of all, from government and central banks, that they are coming to support it. So I feel, yeah, in near term, definitely uh, market can see some corrections at a global level, and if that happens, then it will be a corrections of say 5%. I don't see anything great more than that.
Right. And then with this as well, if you see corporate India, we've seen massive amount of capital raise that has happened in several sectors, and a lot of FI money that is freely flowing into the Indian markets as well. So that's something which is working. But with this, do you think if someone has to see a longer term perspective, this is the right time to start investing? or one should still wait for a correction in 2020 to start investing from a longer term perspective, according to you?
Hiral, if you see, in we had seen in last not only this 6 month, even in before that also, the market was always polarized. Uh,
Hmm.
there are few stocks which are heading long way up, whereas few stocks which are still at very low valuations. So there is always opportunity available in all type of market right now. Even there is a good opportunities which is available in various sectors like auto and banking, which has performed, but not to that extent. In fact, financial has not yet performed at all. So one can look to invest in those sectors with a bit longer term perspective. So quite possible these stock can still give very good return in next 1.5 or 2 years.
Right. And with this, in terms of sectors, also, if we have to see, uh, do you think, because we've seen a I mean, everyone's talking of a decline in potential growth and economic transition that is putting pressure with regards to our domestic equity multiples as well. So, do you think the exposure to sectors which are linked to, say, growth, investment, cyclical, say, financials, materials, energy, these sectors should be right now maybe with the least exposure right now?
See, if you see you talked about financial material and
Hmm.
all. So material anyhow, if you see the metal sectors, that is already performing very well. In fact, they're doing one of the best time in their uh, history, wherein their margins are likely to move up very sharply in the coming period. Whereas banking is not doing well, so quite possible that this particular sectors can attract interest from the people as the stock keep on market keep on moving. People will find it a bit attractive. So the point is that all the we had seen quite a few sectors one after the another is coming into limelight. If you see the cement
Hmm.
stock were there in limelight say 1 month back, but now uh, they are bit lower tone because of the rainy season. Their demand is not there. But I am quite confident that once the October-November period passes, then again these stocks will come into limelight. So there is we need to see where is the value and need to have some patience
Hmm.
to get it materialize.
Right. Overall, another sector, Sunil, which is really seeing good moves right now, pharma, as we know, has been seeing a lot of up move that's coming in. Chemicals has caught up a lot of pace right now. IT slowly, steadily, people are saying it will come back to normal by June. But specifically, if you have to talk about chemicals as a space, do you think contract manufacturing chemicals could be India's next IT in terms of, say, valuations, in terms of performance?
Yeah, definitely. That is, IT is a very big sector right now, but chemical can approach to that. Today, we don't have any visibility to that extent, but see, someone's gains is someone's loss. If suppose government imposes anti-dumping duty on one particular product, it make it costlier for someone else. So ultimately, you can't say that this will keep on going. What I feel it is more of a short-term activity which is happening because at the government level, wherein they are putting up anti-dumping in more of a linear way, uh, which can give support to few companies,
Mm,
but they are increasing cost for some other companies. So
mm,
whether they will remain competitive with that particular type of increase in cost and if suppose they start feeling some pain, then the government has to think over the strategy that whether they can keep on doing that way. Uh, Other part is like chemical. Yeah, definitely. Right now, the another point is that in the world, everyone is looking at India, in particularly for the chemicals, because after China, India is quite competent of manufacturing all these chemicals, and
Mhm.
people are looking for second source for that. So if you take those type of industries or sectors which are internationally competitive and can get opportunity because of this thing, will definitely have a very great futures, what I feel. And in that type of companies, we one can become a long term positive, and that can yield a lot of results for these companies. Another set of companies in the chemical which are getting driven is API companies and all. So in
Right.
that, what we had seen that there was in this last 1 quarter or last 3 4 months, there was quite shortage of all these API. Everyone was worried, if suppose this API is not there in the next quarter, then their production will stop. So all the companies purchased excess of API from all these companies, which driven the price and volume both. So that is continuing right now also, but that will not continue forever. So what I feel like more of a sustainable story in all these chemical is more of a competitiveness of the chemical company, which are competitive at global level and are preferred by international partners. So that type of company I will definitely recommend. One can think of investing in those company for long term.
Right. Now, in terms of newer themes, which are the sectors, according to you, that will stand to benefit from this disruption that we've seen on the back of COVID-19?
See, we had already seen a lot of companies getting benefited because of these disruptions. Mainly, one theme was that of the API. We had
Mm.
seen across the board, all APIs companies are hitting all-time highs and all. Another type of companies were that of packaging companies. So everyone want to eat product in a packed food. So all these companies has already benefited, and the prices are at again multi-year high. Similarly, you see the biscuit companies, they are also had benefited. Similarly, in auto, if you see two-wheeler companies had already benefited. So what I feel like this is, I think, already factor in a lot of stocks. I don't say that there is no scope for further them to improve, but a lot of the whatever the uh, advantage were there has already been factored in by the market in the past. So maybe from here, if someone has to look up for if suppose we get a COVID vaccine and market is start opening up, whether the retail companies can benefit from that. So that is possible. So that type of theme one can look at current point of time. Ki whatever the new sectors which has not performed, but possibly post next 2 3 months they also start performing. So I think one should concentrate on those themes than whatever has already happened.
Right. So, if you have to see in terms of what's happening on the consumption side as well, rural consumption has been increasing. Urban has still not seen a recovery. And when you talk overall with regards to industry leaders as well, they are the ones who are of the opinion that it's the rural demand which is driving growth for them. It is rural demand which is improving right now because of the liquidity on that front. So if you have to take consumer discretionary in the form of, say, staples, or in terms of where, FMCG as a whole is concerned, where would you put your bets in terms of stock specific action?
Yeah, uh, definitely. Rural demand has improved, and that has already been seen by in last directly company related to the uh, rural sectors like tractor and all, and even agrochemical and all. All these companies has performed very well in the recent past. uh, Going forward also, I think their income level has increased in this period. So yeah, your point is that the FMCG companies are likely to benefit from that. We like HUL at current point of time. In fact, the valuations are attractive. Uh, Another company, no doubt, it's more of a discretionary spending, but what we like is Eicher Motor. We like, no doubt, earlier it was assumed that it is more of a urban ride and urban driven vehicle, but their company's strategy in last 6 months or 1 year, if you see, they had reached to smaller town and rural market as well through their studio stores and all. So in fact, that is supporting their sales in the rural market. You know, everyone has a pride to ride a bullet and all. So that is not restricted to just urban people. Even rural people also prefer that. So quite possible that this stock can also benefit from that. And in a smaller stocks, we like even Bajaj Consumer, which looks very attractive to us on the valuation front, and there is a management change which is likely to drive the growth. So these are the few stocks which can be looked at from the rural perspective.
Right. And overall, apart from this sector, what's happening, even with regards to where the banking sector is concerned, due to COVID, what's your review on that front? And which banking stocks will look good? Because overall, if you go to see, we've already seen a lot of fundraising that has already happened, from the private banking side. And you know what everyone is suggesting, in fact, I was reading a Moody's report which was clearly indicating that in terms of even the PSU banks, the quantum of money that they are going to require to raise right now is immense. Now, number one, how are they going to really raise that quantum of capital? And number two, you have private banks which have already gone ahead and raised a lot of capital right now. What message is that giving you, and what stocks look good according to you?
See, it is very clear that there will be some pain to all the banks once the moratorium get removed. Uh, but RBI has given windows of restructuring and all. And see, there is a difference this time. What I feel in the last 3 4 years, all these private banks has looked at retail as a major uh, growth driver, and that is concerns right now. So people are more worried about retail, whether that will be a question mark or there could be a lot of NPAs in that. I feel like since the economy is reviving, and everyone is worried about its CIBIL score. So individuals or retail, if you get your disturbed CIBIL score, then it become very difficult to again get any money from anywhere else. So and there is a restructuring option. So including all these things, what I see that the strain will be there, but it will not be like out of way, and they will be able to absorb it. And second thing, what you need is a capital. If suppose there is any pain, you should have a capital to absorb it. And all these big banks have already raised the capital. So The point is like I'm assuming say there will be around 2% additional NPA because of it, which may be coming. So yeah, okay. Instead of 2%, now it is coming say 3%. So what? 3%.
Mm.
They had already made arrangement for that. They had already raised the capital to fight with that. No? So once that is out, it's all past things of past, and market will look thereafter what should happen. So if you see the quality stocks, all are available at 1.4, 1.5, one time price to book value. So that is really creating what I feel like if someone is having some digesting of some period, so say for 6 months or 1 year, one should definitely look for these large cap banks like ICICI Bank and Kotak. What I feel is much better. What I feel like to start with, one should be in large cap stock because they have a higher muscles powers to absorb all these things, and they've already raised the capital rather than going for a PSU or a smaller stock.
Right. And anything on the life insurance side that looks interesting right now?
Yeah, we always liked life insurance and specifically HDFC Life, mainly because of their compounding nature of earning and growth prospects, which is available for the banks, for these all life insurance companies for next 5-10 years. So
Mm.
it's an underpenetrated area, and they are doing very well and growing very well. If someone is looking for say 15 to 20% CAGR for next 5 years, these are the very good sector to be in, and specifically we like HDFC Life in that.
Right. And what's your sense with housing finance companies and gold finance companies?
Uh, See, first on gold finance, I'm a bit not so optimistic on that, mainly because of they had already performed. If you see, their valuations are at peak, and the reason for the increase in prices was the increase in gold prices, which which helped the buyer to borrow more from the these all NBFCs.
Mm.
But the point is that now gold prices has moved up a lot. I can't say that whether it is moved up from here, but how much. So if the gold prices say remain stagnant or increase by say 5%, then if you see last quarter also their tonnage growth is not there. In fact, quarter on quarter there is a decline in tonnage growth of the gold. So, where from the growth will come? So that is a big question mark, and you are pricing them for a good growth, not for NPA recovery or NPA problem at all. You're not considering any NPA problem over there. So you
Mm.
are pricing for the quality, for the growth of them, and we have some concerns like whether they will be able to grow at over 20 or 25%, which they had done in last 1.5 year, whether they will be able to do that. So I feel not so encouraged to invest in gold finance company right now. Whereas in
Right.
housing finance,
Mm.
yeah, whereas in housing finance, yeah, HDFC definitely offer a very good value right now. I think it's very attractively priced. So one can definitely look at that.
Right. And very lastly, Sunil, right now taking the current market conditions into consideration, valuations are very cheap with regards to hospitality, tourism, taking the current scenario into consideration. So, anything you think, say from a 2 to 3 year horizon, could be one of the best bets that someone should look at, which could turn into a multi bagger then?
Uh, See, if you see the hospitality sector, specifically hotels,
Mm.
in fact, before this COVID, they were on the revival path. In fact, if you see their room rent before this COVID was less than 2008 level.
Mm.
So there was a big means there was an opportunity at that time. We were seeing some green shoots of revival of in the this room rents and all. But all of a sudden, this COVID has come and they had their business has gone for toss. So yeah, definitely these business will be there after say once the things will normalize, and there can be a pent up demand in the hotels also. People uh, are dying to go out of home and travel, and that is I think can drive the demand for all these hotels. But I think it will take some time. It will not be so easy and so
Mm.
near term. Because even if we get a solution for this COVID, the implementation period will be quite long. It will not be like you will be able to implement it on 140 crore populations in say 3 months or 3 months or 6 months. It will take at least 1.5, 2 years to get implemented. So gradually it will definitely come up. But yeah, definitely if someone has a vision of say 3 year and all, one can definitely look at Indian hotel. That was in fact the management which changed, which happened around 2 year back, was doing exceedingly well to revive that particular company. And I feel even after this, once the things normalize, they will again continue to do very well.
Right. And right now, if you have to pick up 3 to 5 stocks which could be good investment bets, say from a 6 to 12 month perspective, what would your picks be?
See, I'm more positive. See, market has seen some run up. I will take three in large cap and three in small cap. Large cap, I prefer Eicher Motor, which I had said, ICICI Bank, and then another stock which I like is Ultratech on the material
Mhm.
side. Whereas on the smaller cap side, I like, I'd said Bajaj Consumer, but apart from that, I like Prince Pipe, and then another company which I like is Anup Engineering. That is also we have recommended to our customers, and that we like that. These six stocks which we can recommend.
Right. All right, Sunil. Pleasure speaking to you, and thank you for those valuable inputs that you've given us for the markets. And one last question, actually, that I've missed asking you right now is we've spoken of corrections in terms of Nifty overall, where it could be, but any broad range that you are seeing right now?
Uh, See, I'm not a technical analyst and can't say exactly what the level and all we can reach. Yeah, definitely, but we had seen in the past that like when you see 3, 4, 5 months of consistent rally, 1 month can be a cool off period, and that is possible maybe in September or maybe in October. So that cool off period definitely will bring down the index. It's very difficult to give any specific number, but yeah, what I said that 5% correction is possible from there in that particular month.
Right. All right, Sunil. Thank you so much for joining in, and thank you, viewers, as well, for being a part of the show. We will get Sunil Jain back again very soon to give us further inputs, but thank you so much.
Thank you, Hiral. Thank you very much.